Welcome to Currency Point, presented by me, Evan Lucas, for FP Markets. As always, please have a very good read through of the disclaimer on screen. Everything in this video is general in nature, none of it to be relied upon as any form of advice at all. FP Markets does not know your personal scenario, nor your personal financial goals, and therefore none of it is relied upon as any form of advice at all. It's just general in nature only. Big week in terms of where we sit. I actually think there might be a bit of downside disappointment if you're looking at the RBA, and the reason for that is that there is a growing pricing of a 40 basis point rate rise for Tuesday. However, if you listen to Philip Lowe and what he's talking about, it's probably going to be more likely 25. Some people will say that's irresponsible. He should be going harder to try and catch up with the inflation that is running away. The caveat to that, and the question I think you should be asking is, if you've already lost control of one of your mandate, what's the point of trying to catch it at the expense of the other two? Particularly economic growth. And that, I think, is the argument to be made right now about why it may take Australia, for example, longer to get up to the levels that need to sort of control inflation. And that's why I don't think they're going to jump as hard as some expect. Watch this space. But then it's all about the US and what the Fed does in a week and a half's time. If you look at what happened in the non-farm payrolls, they were once again really robust. Unemployment holds at 3.6%. If you look at the hourly average earnings, they're up at 5.1% year on year. That's really, really solid. And then over 390,000 jobs created once more, 330,000 of those are in full-time. That's really, really robust. It's why Loretta Meister, the biggest change I've ever seen in anybody with regards to on the Fed board, is now a massive, massive perma hawk. And how she looks at things is that they don't even expect to have a break in September. They expect 50 bips in June and July and then keep going. That was countered a little bit to some extent by Loretta Meister, which is interesting considering that she's also quite a hawk. She was a bit more on the fence about where she sits in terms of what's going on. And her idea is that they may have to wait and see a little bit in September, but if inflation's getting even further ahead, then we could go even harder. So that was her 2 cents and where she sits. All of this was strength for the USD, and I need to point that out very clearly. Euro dollar starting to fall back away again after jumping back up, down to the low ends of the 107s. If you look at cable's just getting continued smashed at 124, and then we're back at May 9 levels in dollar yen. Watch that space. That real yield opportunity is bouncing up again. Could be going back towards 20-year highs. Will be one to watch in terms of that space. And then finally, the Aussie dollar. Aussie at 72 cents is interesting because, again, I actually think the pricing on that is around the idea that the RBA is going to hike at 40. Just keep an eye on it. It could disappoint.